Hi, I'm Dave Goodwin. 10K100 is a business designed to give investors the returns that they've always deserved to make. The business is an internet-based subscription newsletter and trading service that uses a simple system to take advantage of options tradings. Each week, the goal is to make our investors $100. Over the course of a year, that would be a 50% return on their investments. The business was built with risk mitigation in mind. The traders have their own distinct styles. Each night, your position is in cash. And our business can give returns whether the market goes up or down. Further, because the business is built with the SEC in mind, it is a simple, non-advisory system, but we can help you eventually reach your financial goals. People invest in all kinds of ways. According to CNN Money, 57% of Americans have at least $10,000 in retirement savings. Additionally, 22% of Americans continue to make monthly deposits into an IRA. So using the 22% number, we've looked at the state of Pennsylvania. That would give us approximately 2.8 million potential subscribers. For us, 0.1% would give us 2,800 people. That would make the three partners each nearly $1 million a year. There is excellent value in this business for those who choose to subscribe. I already talked about risk mitigation. I talked about the higher returns that people can expect. I also mentioned how our approach is not affected by market declines. The other nice thing we offer is people know each day how the trade went. Every day, a person's going to see how his or her finances are improving. Now, within the experts who I interviewed prior to setting up this business, there are very few day traders. And many people have seen or read something in the media about the failures of day traders. And in fact, it is true. Most day traders do not do particularly well. However, the customers do point out that they want to see higher returns and they are ready to accept higher risk. So we know that the market is there if we can show them that we can get them the returns that they want. For a benchmark for our returns, we talked about the S&P. So far this year, the S&P average has been 21%. Now, if we do less than half of what we say we can do and what we tell our customers we can do, we're still going to beat the S&P. That's only one trade every other week that we do successfully. I think our clients would be happy with that, and most people would. That'd be nearly a 25% return. As I began looking for customers for this business, I interviewed industry experts and certified financial planners to see if they could help me focus my search. They pointed me toward people in their 50s who are financially secure and could afford to lose their $10,000 investment. I talked to more customers then, and the customers painted a different picture. It turns out that customers are less risk averse than the certified financial planners believe. They're frustrated with the returns they're getting in mutual funds and stocks, and they don't think those vehicles will help them reach their financial goals. Generally, they're younger than what the gurus thought, and they want to see a barometer that will tell them more rapidly how they're doing and how they're progressing toward their financial goals. One thing that's different with this is that I don't actually need $10,000 investors. What we're looking for is people with $10,000 in an IRA who are willing to open another account to link to our trading account. And that is all we need to find. Another possible outlet, however, are mutual fund or hedge fund managers. As of now, that idea is on the back burner, but we'll see if it comes back to life sometime later after we've established our business. For 10K100, the customer relationships will be different for a couple of reasons. First, it is an e-based business, so that in and of itself somewhat restricts the customer relationships that you may have had with someone who comes to your office and comes to see you. Like the certified financial planners, though, we'll develop that business in the same way. I've talked about that already, where we meet them and we use clubs or organizations or referrals to get our name out there and to get a person interested in what we sell. The difference, however, is that a certified financial planner grows with his or her client as this person's needs change. They'll start to offer different investments, be them maybe more growth-based or less risky. They'll start to sell insurance, other products. We just have the one product. So as our business grows and our relationships mature with our with our customers, they may choose additional accounts, but that's the extent of it. So as where a financial planner will be in contact with the person as time goes on, we will rely on our relationship to be e-based. And that is something that we've already talked about and that the customers seem to enjoy. Since 10K100 is an e-business website, most of our key partners are going to be e-business websites as well. And there's no relationship we have that's going to be more important than that we share with our broker-dealer. The broker-dealer is where our clients will go to subscribe and move their money. It is the place where they will have the functionality to link to our account so that they can participate in the auto trade system. That website needs to be easy to navigate, it needs to be straightforward, and it needs to be secure. We need to know that the broker-dealer is SEC compliant and their clearing procedures are up to date and up to snuff. The broker-dealer also will provide the tax documents for our clients at the end of the trading year. Other big things with our broker-dealer, though, is the fees that they charge, the functionality that they offer, and then, of course, the speed that they can trade. I can't emphasize speed enough. For our business, as we trade more and more clients and more contracts, it's going to become harder and harder to get a consistent price as we buy and we sell for our customers. For example, say we're buying and the market is on an uptrend and we buy initially at 50 cents. And our plan is to get out at 53. Well, if the market is going up quickly, no one's going to sell us contracts at 50 cents for those later ones. So we'll buy the first, say, half at 50 cents, and the second half will get 51 or 52. Well, then we go to sell at 53. So some of our clients will get a 3-cent profit, which would equate to, say, $150 on that trading day, and some of them might just get $100 or even $50, depending on how rapidly the price goes up. This only affects us negatively. It can't happen where, we asked for 53, but the market was 55 and we get 55. That's not how it works. So speed is really important. And we hope for the best. We hope to establish a relationship so that eventually our clients become a priority for our broker-dealer. Other key partners will be websites that provide the data we use to make our trade and to read the market momentum. There's a picture on the screen of a sort of normal TD Ameritrade day that we look at in order to predict what those trends are going to be. We have other websites where we used to do daily trends, and that's something that kind of gets us in the door. It gets us set up for the trades that we're going to make that particular day. Strategically, we have a pretty good handle, I believe, on our key activities. Tactically, we need to flesh some of them out a little bit more to see the final product, but the strategy, I think, is there. Under key activities, we need to create our own website, which will, of course, not only be the face of the business, but we'll also point out to people how they sign up for us, how they sign up with the broker-dealer, and what they need to do in order to link their account to our master trading account so they can participate in the auto trade functionality. I think the website is pretty important, even though the gurus don't necessarily see a lot of value in their website because, of course, remember, they're affiliated oftentimes with some sort of national brand. So their website doesn't necessarily bring them business. And it won't for us either, but what I think it will do for us is it's still going to be that main point of contact. It's going to be the face of our business. And so it will be important that it looks good and that the functionality is good, and of course that the security is good. Our website will need to explain who we are, what our process is to a degree, but not, of course, give it away. How somebody would sign up, any frequently asked questions kind of report. We'll probably put a video on that explains it basically, and then we'll want the flexibility to at some point address education if we choose to go that route as an additional revenue stream. We also need to, of course, to finalize our sales strategy. We know that we will follow as I mentioned earlier, that we will follow the local certified financial planner model of contacting clients that we meet in various ways, and then slowly build a business that way. But what I mean for the future is, will we continue to do that? Will that continue to be the trader's job to make sure that we get sales? Or at some point we'll be able to expand and actually hire people to take care of sales who are experts. Our intellectual property is our trading strategy. We need to continue to tweak it, make sure it's as good as it can be, and even just make sure that our processes are as good as they can be, because you're going to make bad trades. There's no question that'll happen. Otherwise, everybody would do this. But make sure that we minimize that and that we risk mitigate that and make sure that we catch early when trades are going south and we get out of those positions as quickly as possible. Those are the places where we can continue to improve, continue to get those best practices down. Credibility has been an issue, and we've talked about it throughout the development process of this business. We have one lead trader who will have 4 years experience by the time we're ready to take on clients. The business will have 1.5 years to 2 years experience by the time we're ready to take on clients, and we'll have that much of a record that we can show and that we can sell from. So that'll be important. In the research, the customers have really been pretty happy with 1 to 2 years. The gurus look for more before they would invest in something. But it will be 1.5 years to 2 years. So that, of course, brings up the idea, do we need to have more experienced traders? Do we have to get someone else on the books? That's not our plan at the moment, but we'll have to see. If we can't sell, then maybe we'll have to look to see if there's someone else who's an experienced trader who might want to join up as a partner. I also talk about the idea of having just a financial name that people would recognize. Maybe, and because it's an e-business, this person could be anywhere in the United States or anywhere in the world for that matter, and just sort of be aligned with us. It's mixed reviews depending on who you speak to. Some of the gurus liked it, some of the customers liked it, and some of them saw it as for what it was. It was just a name to give credibility. But it's something that we need to keep in mind if we're having a tough time selling our business. The last thing I want to point out as far as credibility goes, and it's on the slide, is the screenshot of the spreadsheet, and that's just the end of it. I've mentioned to you before that it's hard for us to trade in the summertime. But as you can see, and I want to bring up specifically June 12th. If you look at June 12th, you see a great example of what we think is the strength of our business. You can see that we made 3 trades that day. The fifth column is the initial of the person who made the trade, and then the strike price that the person chose. As you can see, all 3 of the traders made a trade that day. 2 of us missed, I was one of them, and 1 of us got it right. And that is, again, it sort of highlights that risk mitigation technique we talked about, where although we misread the market that day, one of us did get in a good entry point and got out at a good exit point. Now, sadly, his trade was not as positive as ours was negative, but nonetheless, it is a good thing. It shows that kind of works, and that does mitigate risk. Remember, it's risk mitigation. We're never going to get rid of it all. So that's something that's important to us. And you can also see the value of the account, how much it continues to grow, and our overall success rate in the last column. And when we sort of took our summer hiatus, sort of forced upon us, we were at 80%. So that's a pretty substantial trading record, and it's something that if we could continue, is certainly something that we could market. Again, the beauty of an e-business is that your key resources are minimized. Our physical resources are pretty much purchased. The traders have their own homes and they have their own computers and internet connections, and that's the biggest part. Our intellectual property, I've talked about before, we're still working, but we think it's solid. We think it's a viable product already. And financially, we have a few decisions to make on how we wish to expand, but the market is going to tell us that initially. Our goal, of course, is to not include an extra trader or to hire a sales force, but we'll have to see if we can really get away with it. And then, of course, we'll need to cultivate client relationships and client referrals, and that's going to be a great way to expand the business. And it's the same model that the certified financial planners who I spoke to rely on. Luckily for us, our channels are simple. It's through the internet, and it's something that our clients prefer. I have a specific question about that. And with the growth in e-business, in e-commerce, they're comfortable with it. So I'm pretty confident that the e-channel is going to work just fine for us, be it an email, a text, Twitter, whichever. Once we get our clients, that is, I think, the best way for us to deliver our product. Like channels, our cost structure is pretty straightforward. We have the salaries of the traders. We have the salary of our office person who is already employed by one of the partners. And then we'll have other salaries depending on if we need to hire a more experienced trader or get a name or hire a sales staff. Also, there are the fees that we have to pay for our website subscriptions. As the business grows, we'll have to look at other costs, insurance, and things like that. But as of now, it's pretty straightforward. As of now, our revenue stream is going to be from the subscriptions of our clients. To get lifetime value, we hope to deliver a product that will inspire them to open a second IRA account or maybe 1 or 2 commercial accounts. Otherwise, we've talked about education. It's a possibility as the business grows. And same thing with working with a hedge or mutual fund manager. We have to investigate that business before we can get into it. We're not sure what the legal requirements are. Through my research and talking with industry experts and potential customers, it is clear that 10K100 is a feasible business. It was simple to set up, and most of those costs have already been incurred. It is valuable. We have brought value to ourselves through our trades, and it is clear that we can extend that to our subscribers. We risk mitigated through our intellectual property, and it does seem to be performing well. We've executed a bunch of trades, as you've already seen, and you can see on the spreadsheet. And it is obviously profitable. We doubled money in 4 months. So this is clearly something that we can bring to market. It is clearly something that people want to be able to subscribe to, and then we can deliver. In fact, at the rate we have is so much more than we've advertised that we will bring people. We're confident that we can do this. We're confident that people will want this business, and we are sure that you'll see it the same way. Thanks.